Hey, everybody, welcome back to another edition of Market Talks with Dr. Stocks. This is Dr. Tom Carr, aka Dr. Stocks, coming to you from the live trading room of the drstocks.com site. That's DRSTOXX. We've been in business every day since October of 2002. And if you want to join me and a large group of amazing people, I mean, really, really amazing people, really kind, helpful, supportive people who are at all levels of trading experience. We do have some very experienced traders in the room. We've got a lot of folks who are just learning how to trade and everybody in between. Go over to the drstocks.com site, click on the subscribe button, scroll down to the live trading room, and you'll be able to join us right away. You can add on the brand new live options room. We only do options in that room, and you can do that at a discount. And if you're looking for something a little more sort of end of day, uh, tell me what to trade in the market, but I can't hang out with you in the trading room all day kind of thing, you can go to the stock pick advisories if you want to learn how to trade. We've got webinars, we've got manuals, and a private coaching service. All right, enough about that. Let's get over to first, let's take a quick look at the overall market and FinViz. This is the 10-minute chart for the four major indexes, and you can see it's a bit of a chop fest today. So we had two pieces of really good news that came out overnight. One was that NVIDIA reported earnings. It was a huge beat on EPS. I don't know exactly how they did that. And as everybody knows, the EPS figure can be manipulated pretty easily, right? You kind of hide off to the side somewhere some of your expenses and make things look a little more profitable than they actually are. I don't know if they did that. I'm not accusing them of doing that, but it was such a big beat that there must be an explanation out there somewhere. So last quarter at this time, I'm sorry, the previous quarter of this year, they reported it was earnings of 89 cents per share. The market expected that to come down this quarter to 75. Instead, they went up to like 95. And revenues were higher, and they looked pretty good on the guidance and everything that the market needed to hear about the Blackwell chip overheating and the problems with China and the new Trump ban on selling our products to China, selling our chips to China, and other things were all addressed quite professionally, I think, by the CEO of the company, Jensen. So market was happy, shot way up. It was up 12%, 13% right off the bell. It has started to come back down. In fact, in our options room, we put on some short-term put options just to kind of ride that wave lower. I think it'll probably get close to closing the earnings gap, 136, 137 or so, but I think it'll get back on track. It's just, you just have to own NVIDIA. I'm a long-term holder of NVIDIA. All right, so that was one piece. Sorry, I'm going to get too long-winded. One piece of good news. The other piece was that a judge, a court, came out last night or early this morning and put a kibosh on the tariffs of President Trump, saying you cannot put so many tariffs on. We are looking into this matter, might be a constitutional violation, et cetera, et cetera. And of course, the Trump administration is going to try to fight that or appeal it or take it to a different court, take it up to the Supreme Court. We don't really know where all that's going. I'm a little bit out of the loop today, but that was something the market liked because any sort of mitigation of tariff pressure is a plus for the stock market. So those two pieces of good news kept us in the green most of the day, but as you can see, it was a sell-off, a sell fest right off the bell. Hit a pivot low into 11 o'clock and then another leg lower into noon. Then we printed another lower high, and now we are trying at least in the NASDAQ, the S&P, and the all-important small cap index to print a higher low on the 10-minute chart. If we can do that, we still have an hour and 45 minutes of trading left. And if we can take out the pivot highs around 11 o'clock, right? Those pivot highs right there around 11 o'clock. If we can take those out, we might see a nice run back up to the highs of the day. I'm not holding my breath for that, but it would certainly be a best case scenario. I'm frankly just happy for the indexes to close off the lows of the day, maybe a bit into the green, which would set up a pretty decent bounce day tomorrow as we close out the weekend. All right, enough about that. Now, let me see where we're going from here. Want to look at, yes, Black Box Stocks, which is the software. If you're following me in either of the two rooms, you know that I use this software every day to find some unusual patterns in calls and puts that are being put out there by big money traders, because I only limit the trades here that I'm seeing to $100,000 or more. And when things get really thick, I may raise that to 500,000 or whatever. But this is how I usually use this. I did this yesterday with our live options room. I'll show here in the live trading room. If I'm interested in a stock, well, let's say NVIDIA, and I want to see how the market is treating it today. Don't know how it's, I don't know what the view is longer term, but I can get a pretty good sense of what the expectation is on the part of smart money traders for NVIDIA over the near term, and in some cases, the longer term. You have to look at the expiration dates. Are these day traders that are going to, they're expiring tomorrow, Friday? Or like we have puts that are going to expire tomorrow, but they're already nicely profitable at this point. Or are they going out several months? Or are they going out a year? Are they buying leaps on NVIDIA? They've got a really good, healthy, bullish posture, and they're loading up on maybe some deep in the money calls, because they feel that NVIDIA is going to have a great year ahead. We can tell that kind of thing from the option flow. Now, if you do this on the night before earnings, the day before earnings, you can get a pretty good sense. I mean, it's a little bit like cheating, but you can get a pretty good sense of whether or not the market expects NVIDIA to do well on earnings and the market reaction to be bullish. This is exactly what we saw yesterday. I showed this to our live options room yesterday. We looked at the NVIDIA option flow yesterday, and it was all calls. And when we scroll down, let's do this. Let's scroll down to only looking at $1 million per trade or more. And it kind of looked like this, only it was a lot longer list of calls. And there were only one or two puts over the full day of trading. But let's just take a look at this. Most big traders, deep-pocketed traders. These are guys who are trading hedge funds. They're managing private money. They've got they're just very successful, and so they're managing a 10-figure account. These are guys who are very bullish on NVIDIA. And here's the thing: people with that kind of money tend to know how to make more money. The people with this kind of money tend to not take stupid bets on bad trades that you and I often get tangled up in. So they tend to avoid that kind of stuff, and they throw their money at something that's not a sure thing. Of course, there is no sure thing in the market, but a very, very good edge on bet. And that's exactly what they're doing. Calls, almost all the way up the line, and this $1, $2, $3 million at a pop. Let's see if we can drill down into the expiration dates and see. We've got some going out to March next year. Here's one going way out to December of next year. That's more than a year away. March again. The January of 27, that's way, way out there. And here's September. There's a bunch in September. And what about strike prices? Current price of NVIDIA is 139. And here's a 180, right? 180 going out to December of next year. And they're paying $21.65 for those, and they bought 1,000 of those, spending $2.2 million. All right, that's someone with a pretty good, healthy sense that NVIDIA will be doing really well over the next year and a quarter. So if the strike is 180 and they paid $21.65, NVIDIA's got to get well above $200 for them to even break even on that set of calls. So that's a pretty healthy move from 139 to over 200. Here's some deep in the money, right? So stock is trading at 141.80, and they bought the 98 strike. That's deep in the money again. Of course, they're doing that to kind of leverage their cash. So they're almost trading a one-for-one ratio on the delta side of things. It's like a 95 probably. So every dollar that the stock moves, the option will move 95 cents. That's a good way of leveraging your cash. You don't have to outlay so much cash to get almost the same amount of return. And that's what they've done here. It's going out to September. Now they paid $46 for that. So Nvidia's got to get up above like 145 for them to break even on that. But I bet they will. I bet it will, especially by September. Here's a guy out to 200. He 200. This is the way out there. So December of 27, and he spent $28. So he's looking at a price of 228 minimum to break even by the time of December, not 25, not 26, but 27, way out there. Okay, so again, if you're interested in a stock and you want to have a pretty good idea of how it's going to react or how the market's expecting it to react over earnings, the day before earnings, do this. See what the big money players are looking at. Are they hopeful? Are they bullish? Are they taking some big bets? And that will give you a pretty good idea because these are the guys that know what they're doing. There are other tools. I looked at a second tool yesterday, but we don't have time for that. Now, over on our charts, I want to show everybody a setup, a technical setup that you can use to find stocks that are trading down near 52-week lows. So these are not some of the better stocks, right? These are stocks that are totally out of favor with the market. But there is a way that you can start to get into or nibble on some shares of a stock just as it's starting to lift off those lows. And I know from my own research into trading systems, because I have a whole system that's built on this, and that you'll find that in my Trend Trading for a Living book. It's called the Bullish Base Breakout. That the best returns come when stocks have built a base down near 52-week lows, and you have to look at technical indicators, you have to look at volume, and you have to look at price patterns. But when all things line up, you've got a very good chance of latching onto a 30, 40, 50% run over several weeks. That's when you get the really big runs. I've said this before. So if you take 100 stocks that are trading at 52-week highs, and you take 100 stocks trading at 52-week lows, and you followed both sets over 12 months, you're going to get a better return on average with the guys at the highs. However, if you take 52-week highs and you take 100 stocks that are showing the pattern I'm going to show you, plus a few other things, and follow those for 12 months, the guys at the bottom showing that pattern are going to perform much better, much, much better. I have a manual. If you're interested in this, go to drstocks.com and buy the 50% per month, 50% per month manual, trading manual. You'll find all about that bullish base breakout system there and how to spot stocks that are they're really ready to pop. Okay, so let me give you an introduction here. Now, I'm not sure what best stock to use, but I know that one that recently triggered this signal is in an oil play called CVX, right? This is Chevron. Everybody knows Chevron. And so it's down here at 52-week lows. And if you can see, right, going way, way back, this level that it's at, 135, I mean, got down a little bit lower than that, but a lot of the closes were around 135. That was the set of lows that held in September 24, September bottom, and held again, or got close to holding again. This is more like 140 back here in 2024, January, and the end of 2023. So it's a very significant level. They're down at this level again, and it's been down here for a couple of months. So it's building out this bullish base. Now, a bullish base has to satisfy several things to qualify as a bullish base. I'm not going to go into that. But here are the two technical patterns that you want to look for. Number one, you want to see the RSI. That's what this is right here. This is set at a 14 look back with a 10-period smoothing average on top. You want to see it dip below 40. Normally, we think of 30 as being kind of the oversold level, but for this, we don't need that. We only need a dip below 40. It can go to 30, it can go to 20, it can go to zero, but it just has to go below 40. That's number one. Dip below 40 during this bottoming pattern. Now, if it rises above 40, it's still a valid signal, but I'll give you a qualification for that. Here's the second thing: you go down to MACD. This is your standard, um, 12, 26, 9, I think, are the standard periodicities for the moving averages. And you've got the smoothing factor on top here, which is I forget what the smoothing is. Is it 3, or am I confusing that with stochastics? No, 1226 are the fast and slow, and then the 9 is the smoothing. Anyway, the green line here is called the signal line, and the black line here is just the MACD line. And when you get a cross of MACD bullishly above the signal line, below zero, right? So this line right here is your zero line. If MACD is below zero, it's in a downtrend. If MACD is above zero, it's in an uptrend. So it has to be down below zero, and below zero, it gets the bullish crossover of the signal line. When those two things happen, right, you're below 40, and then you start looking for the bullish crossover in MACD. And when you get that, the first day of that bullish crossover, that would be your buy signal. Now, here's where things get a little tricky. It tends to work much better if RSI is still below 40 at the time of the crossover. We don't quite have that here. The crossover happens on that day, and you can see it's that little green bar right there. Let's zoom in. Let's zoom in a little bit. Okay, so the crossover happens. That's the first day of the crossover, and you can see it's a Friday, the 25th of April. And if we go up to the RSI, you can see that green line right there is just a little bit above the 40. It's close, but it's not quite there. So it does dip again below 40. And at that point, we're still in a bullish crossover. The MACD is above the signal line. And so this would be probably a better entry right down here. And in fact, we did play CVX. We didn't get as much out of it as we wanted because of the little gap down that happened that day, but we bought some right in this area here, and it did move in the right direction. We were able to raise up our stop into profit, and we got stopped out for a small profit on CVX. So you can trade it any sort of way, but and it did dip below 40 again, and we still have, I think, we just have the MACD in a bullish position below the zero line. And so that would be a third entry right there on this current base, right? Okay. There are some other things going on that we need to pay attention to. There's a volume analysis that goes with this. There are some parameters around that base, right? It's got to be a certain length, and it can't be too wide between the lows at the bottom of the base and the highs at the top. Okay, enough about that. Just wanted to point that out. It's kind of a fun little trading system, and you can test it out for yourself. See if you can find some trades using that system. And you want to make sure you're always using a stop, and you can sell some of your trade. Put the stop down here below the lows. Sell half of your position when it gets up to the highs of the range, and then see where it goes from there. Okay, now let's take a look at some index charts. So here's a thing that's concerning a little bit of concern for me. So overnight, the S&P 500, and I think this is true of definitely true of the Nasdaq, both which have NVIDIA at the top of their weighted indexes, rallied hard on the NVIDIA numbers. And all of that came out just before futures stopped trading, right? At 5 p.m., they stopped trading. And then at 5 p.m., they had a conference call. Things got even better. And so when things opened up again at 6, you had a little bit of a gap higher between yesterday's trading and the new trading day for today. So it was very bullish, right? Both the NASDAQ and the S&P were very bullish off the bell. and rallied up, and the S&P hit 6,000. Everybody has been looking for that to hit 6,000. It happened a little sooner than I thought it was going to, but it did. It hit 6,000, and from that point on, it's been downhill pretty much the whole time. Let me see if I can show you. Like here's a 5 minute chart of SPY, right? So here's that nice run. Here's the Nvidia happened somewhere in here, right? Last night. Where was Nvidia? That's the close right there, down here at the lows, right? It didn't close very well. Then somewhere in here we had the Nvidia coming out, and we can see the big pop, and then rolled back down a little bit, and then I think this was the conference call response because that's at 6:30 yesterday. It was just up, 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 right? Up, 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 tagged, almost got up to 600. Everybody's looking for SPY to get to 600, S&P to get to 6,000. 6,000 was hit. S&P SPY did not quite hit 600, but it sure came close, almost 599. Downhill, 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 downhill ever since. We flushed out, got below yesterday's lows. That's a little scary, right? I know a lot of new shorts probably piled in there. A lot of new longs got stopped out at that point, and it bounced sharply to trap those bulls. Now, here's what I'm hoping will happen today, and that is we print right here. We print a higher low right there, and then we come at least up around 590. If we close at 589.50, I will be very happy with that. I think we probably would have dodged a bullet for anything worse happening tomorrow from a technical basis. It's all relative because any tweet, any headline, any hint of anything with tariffs, and we could go right back down again. So here's the thing. Let's zero in on this little cluster. It's now the S&P and the NASDAQ. Maybe the NASDAQ is, but the S&P did not print an inverted head and shoulders in the same way that we saw so clearly with the small caps and a number of software plays and most of the tech stocks, printing nice looking inverted head and shoulders, very bullish pattern, very reliable. They've all broken out or are about to break out to the upside. But the NASDAQ is also filled with a lot of tech stocks that have printed bull flags, also quite reliable. Let me show you this here. Let's get rid of these drawings. And a bull flag is where you get a nice run higher, and then you get a soft little pullback. You need at least 5 bars in there to constitute a legitimate bull flag, and that's pretty much what we got. Bull flags typically are formed with a sequence of lower lows, lower highs. They can look kind of scary, especially if you're looking at like an hourly chart or 2-hour chart. You can see this downtrending channel with lower highs, lower lows. You're thinking, oh, the rally's over, it's done. But no, all it's really doing is just consolidating that move. It's a shallow pullback coming back into support. We've got plenty of support here, right? We've got that pivot high, we've got the 200, and we've got the rising 21 EMA. All of those held. Then on Tuesday, we got good news over the weekend. It rallied back up on the holiday after we got back to the trading desk on after the holiday, Memorial Day. And we've had 2 days. I'm just going to call them consolidation days, right? Bullish holds in the upper third of that big green stick. And to me, that's bullish. The only thing that I don't like here is that we went way up to clear out a lot of short stops, but couldn't break out and hold those highs. We're coming back down in. So it is possible. It is possible. I'm not saying it's going to, but it's possible for us to come back a little bit more, and then we get the breakout in June. And I'm going to go on record. I think June is going to be a very good month, all things being equal, and that could be totally wiped out. But all things being equal, if things don't change in any drastic way to the negative between now and the beginning of June, I think we're going to have a good run to new all-time highs in the S&P and the NASDAQ and the major stocks of the market. I would really like to see small caps have a great June as well. I'm not so sure that's going to happen, but it'll certainly um, tally along, tag along with the rest of the market if the market is good. So because of that, it's a classic reversal bar almost, right? A classic reversal bar is where you open up within the body of the previous day, you shoot higher to flush out a bunch of weak hands and trigger stops, and then you close down within the body of the previous day, and especially if you close below the open, that is a classic reversal bar, and that's kind of what is forming here. So we could set up another weekday tomorrow, right? But I'll tell you what, as long as we hold, here's the big green stick. That's the one that really changed the momentum of the short-term market. As long as we hold above the about, let's call it 50% of that green stick, I think we'll be okay. NASDAQ is going to look kind of similar. There's your flush out bar, your reversal bar. Volume's been, it started light, but it's been heavy, or at least above average. And there's your line that I would really like to see hold into tomorrow, into the weekend. If we do that, then it's just another day or two. Is it? When do we start? No, we'll be in June on Monday. So we only have one more day of May. If we can hold above that line for the month of May, and month of May has been really good, right? Up above 5% overall. If we can hold above that line and close on a good 4 or 5% return for the month of May, I think June is probably going to be even better. That's the good news. The bad news is that we still have to price in a lot of stuff that the market is uncertain about. And I think this whole pause in the tariff thing is adding a little bit more uncertainty. Okay. Small caps, not looking all that great, but they are improving, right? This is a longer term, I don't know if we call it a flag. No, we're not going to call it a flag. This is what it is right here. The inverted head and shoulders. And I'm not the only one to see this. There are several guys in my pro trader group who are looking at this. We had a little bit of a peak above that neckline this morning, or overnight, I guess it was overnight. And we've pulled right back down again, and now we're trading kind of close to the lows of today and the lows of yesterday, and it's not exactly where we want to be. We are still in a downtrending LRC. We are up in the blue zone, which is typically where you see things kind of fizzle out and fall over. But I'm cautiously optimistic that this pattern will confirm. We need to see a close above 2120, and then once we get that, and we get a follow-through day after that, this should be off to the races, because this is a deep hit, right? Let's call it 1750 up to 2115, and I'm not going to do the math in my head, but that's 2400 or so for a target on that pattern, which would be way up there. So I like that. Gold, I think, is starting to get a little perky here. It just needs to break out of that pullback. Then we get a test of the range highs, which are the all-time highs, and then I think gold is back on track. In fact, I think it's back on track now. So I may get us into some gold futures before we close out trading today. We like to see the 10-year falling. It was really strong this morning, and things looked ugly. But we want to see the 10-year falling. We want to see rates fall. We want to see bonds go back. And speaking of bonds, let's take a look at TLT. This is the pattern that I'm marking, right? We've got the RSI breakout. Now here's your setup. Below 40, and you bring it down to MACD. Where is the the crossover? Where's the crossover? It's today. Today is the first buy signal that per that system, right? Now the thing is, this isn't really a bullish base. It's a falling wedge, which isn't a bearish thing either, but it's not exactly following that system, right? You want to see several weeks, several months even, testing the lows, testing the lows, testing the lows before you get a much more sustainable uptrend. So I don't think the bonds are ready to just go crazy, but I really like what they're doing today. I really like it. I thought they were going to crack I really did, because we've got gaps down below and the yields were up, and there was just some uncertainty out there on the news, but they went right back up again, and that's very good to see. Now, 21, we've got to get above that. Then we close outside of this wedge, and then I think we could probably get a nice run up to 90. Right? That would be a nice run, and you can leverage that with one of my favorite funds, TMF. It's not quite the same pattern, right? It's actually already broken out because of the leveraged nature of this, but it is a nice looking wedge breakout. Volume starting to come in a little bit today. Here's your dip below 40. Here's, as of today, first MACD buy signal. So, yeah, maybe we get into some TMF as well. Okay, guys, I think that's about all I wanted to do, because I didn't really want to look at uh, at my watch list, because it needs to be updated, and I don't really have anything on right now that we're not already in that I'm that excited about. So let's take a quick look at Bitcoin. So it's weak today, but this is a nice looking pullback, and I would like to see this come back a little bit further. So we've got 5 bars, although that's probably the last bar of the flag pole. So we really would need one more, and it's just nicely formed, right? This is strong up, strong up. It's even maybe a little sharper than 45 degrees, but it's a nice soft pullback. The volume is tapering off very nicely. This is a classic consolidation move, cooling off move, let valuations catch up kind of move. Money's rotating out of Bitcoin and going into other things, bonds, probably mostly, and gold. And it's going to come back into Bitcoin, because this is a must own position going out 3, 5, 10, 20 years. I don't know how long I want to hold my Bitcoin. I've got iBet. This is the one I use. But I'm going to hold as long as I can. Now, I think this is the other one I wanted to look at, MSTR, which is MicroStrategy. It is largely a proxy play for Bitcoin, because they don't really have a product anymore. They're just selling their shares and buying Bitcoin with it. And as long as Bitcoin goes up, their asset value goes up. And it's not a bad business model, but the market's been punishing MicroStrategy lately. And I think because they are maybe selling a little bit too much, they're diluting their value as a company. And this is this is not a bull flag, right? That you don't get a bull flag that drops so sharply like that. But this is a falling wedge. Falling wedges can and cannot be bullish, but they're only bullish when you bounce up and break to the upside on good volume, and you have to get above certain levels of resistance. And we've got a lot of overhead over here, right? So overhead supply here, overhead supply up here. You've got a gap, you've got the 21. There's a lot for MicroStrategy to get back above, but I'm keeping an eye on it, because when it gets going, it's a lot of fun to trade. All right, so that's all I've got. I'll record this part. So let me go over to the trading main room. And if you guys, members of the room who are listening to me, can type in the ticker symbols of stocks you're looking at, I can probably take about 7 or 8 or 9 of these. And I see a few already. So let's take a look at this. MRUS. I don't know what this is. Maris. Okay. Well, that's an interesting. Look at that. It reminds me of GameStop. Did you see the chart of GameStop last couple of days? Right? Shot up in anticipation of earnings. Earnings haven't happened yet. And I do think that they'll probably get another leg higher on earnings, because I'm seeing guys in my pro trader group get in on board. Let's take a quick look. I'm sorry, I'll get back to Maris, but let me just take a quick look. Well, there's nothing over 1 million. Are they buying GameStop? Yeah, kind of. Nothing too extraordinary there. Maybe we'll check the day before earnings. Okay. The one that you just mentioned, MRUS, looks a lot like this. So in a chart like this, I wouldn't be playing the daily chart. Here's some good things, right? It isn't an uptrend. I don't know why it shot up so high. It's not on earnings, so you'd have to figure out what caused this revaluation. but that gap has been held open. So that means the market values this as a $50 stock, no longer as a stock down in the low 40s. So you've got a very good line in the sand down there, but it's already up now to 56 and change. So the only real way to play this is to either put a stop way away, like around 48.80 from current price, or you drill down into like the 1 hour, 2 hour chart. Yeah, it's doing some nice stuff, I have to say, right? The ups look very strong, good momentum, very good volume. The downs look a little weaker, right? Not as sharp and lower volume. So this has got some good bullish sentiment. I would say it's a hold, but looking at this hourly chart, it could break out of that and get up into the low 60s pretty quickly. So if you're already long, hold it. If you want to go long, this is what I would do. I wouldn't buy a big position, but I would start putting my stop right here about 53.30, and I would just trail it up every time the price goes higher. So that's a pretty reasonable risk, right? A $3 risk on a $56 stock, and your target would be, well, I don't know exactly. It's probably going to get up into the mid 60s. I would say 65, right? 56 to 65 on a $3 stop. That's pretty good. That's how I would trade that one. And I like it. I have no clue what the company is. TEM. So I did see this one. This is Kathy Wood. Let's go back to the daily chart. Kathy Wood's, one of Kathy Wood's favorite stocks. That's about all I know about it. Software, I'm pretty sure. Okay, so I would have to say that this is not a trending stock. It is range bound, and the good news is that the range is getting tighter, and the longer the range gets tighter, the more likely it is to really move once it breaks out. Good news too, it's holding the 200, it's holding the 50. It's printing a little inside day candle after a big one-day sell-off. You kind of wonder what happened yesterday. That's a lot of volume right there. Everybody was bailing out yesterday, and it dropped down almost 10 points from 65 to 55. That's nasty. That's a really nasty drop. So I kind of would want to know what was going on there. But on a bullish basis, if you nibbled today on this little bounce and a hold, I don't blame you for doing that. And I would say you'd have to put your stop down here around 50.50. So it's about a 9% stop. It's a little bit of a risk, so keep your size small. I think there's a better than average chance that this is going to start to head back after a couple of weeks to test that resistance line again. And if not, you're out. Yeah, it's not a horrible setup, but there are better ones out there. UNH. So we're long UNH in both rooms. We're long UNH as a long-term recovery portfolio play. We bought a little bit ago. It's kind of lounging around not too far from our entry price. I will add to those shares if and only if we see a bit of a dip, and it's just not dipping. It's not going up. It's not dipping. It gives us a little bit of a tease, gets up $4 or $5 and then right back down again. We're long calls in the other room, and the same story, not really going anywhere just yet. Okay, so on a valuation basis, this is a good long-term hold. It will be back, quite sure of that. It's not going anywhere. I know that there are some pending lawsuits out there, but those typically get, solved out of court, right? And it's not a big deal for a big, huge company like this, Dow Jones Industrial Company. And I think the market's just kind of waiting for a bullish catalyst. And maybe that comes up on earnings, maybe not. Maybe the lawsuit getting settled would be helpful. I'm not sure what else the company can do to kind of win back the investor sentiment. But here's the good news. I think the low is in. I don't think this is going to go any lower than it did a few days ago around 250. I mean, that's a big move from 300, but 250 is the downside kind of limit. And the upside is really up there, right? 400, 450, 500. 500 is just getting back to the 200 period moving average. So that's a 67% run just to get back to the 200 period moving average. I think that will happen. Um, but patience, patience, patience is needed for this one. Bull. We did look at this. Yeah, we bull. So it's just doing the same thing. We looked at it last time. It's just going nowhere. To me, this looks like dead money for a while, and it has been dead money for a while. The only way to trade this is you drill down to something like the 10-minute chart, and let's see what it looks like here. You day trade this. It's not a swing trade. Right? I don't really know. I don't really even like it as a day trade. Right? It's downtrending. You could short it, but I think I would only short a pop. I wouldn't I wouldn't short it on a break of the lows because it's probably just going to hold that and bounce back up, right? It's just stuck in a little tight range, not really going anywhere. On a day trading basis, it's a pretty good range, right? 12 to 14. You can trade that, but let it get down to the lows, start to coil back up again, so it holds. New volume starts coming in, starts taking out maybe the previous bar's high, the previous bar behind that high. That's when you buy it, and then you get out somewhere near the top of that range, or you get out of the 200 period, or you get out at the gap fill for a buck, right? But that's all you can really do with a stock like that. Let me do a couple more. Oh yeah, TEM. That's right. I did actually read that this morning, but somehow I had it mixed up with 10-cent music, which is TME. But yeah, I did read that. It was a short report, and often, I mean, whoever is interested in TEM on the long side, I have to pat you on the back because these overnight boutique houses that come out, Citron is another one. They come out with these hit pieces, and you got to wonder when these stocks go down 15, 20% in just a few hours because of that, whether uh, they're in cahoots with the algorithm traders, the high frequency traders, knocking the price down. They buy a whole bunch of stock down at the bottom, and then it floats back up again a few weeks later. That you just see that pattern a lot, and if you can, buy it, hold it, set a wide stop, and have some patience, you usually get most of that. It usually retraces most of that move. Okay, WPM. Yeah, so this is a good one. This is in the precious metals space. It's a mining stock. It's one of the best ones out there in terms of fundamentals. And at least I am waiting for gold to give me a good solid buy signal. But I think once it does, you're going to see WPM shoot up. Well, how is GDX doing? I'm curious. GDX, yeah, very similar kind of thing. It's a little bit below the 52-week highs, further than WPM, but WPM Anglo American, I think it's called. AEM is the ticker symbol. There are a couple of others out there. What is the one that I always put my trend trade letter in? GFI, Gold Fields. Those are like the three mining stocks with the highest IBD metrics and growth and all that. GDX looks pretty good, yeah, and I'm 90% sure gold is going to have a good leg higher when it breaks out that little trend we saw, and this would be a good way to play it. I wanted to see silver real quick. Silver, because I haven't looked at silver for a while. Yeah, it's not horrible. You can leverage this with AGQ, right? So your silver's not doing the same thing as gold, right? It has industrial use. It's connected to the home building industry, and industrials and home builders have been depressed because of the rates. So that will change when rates start to come down. And silver, to me, looks like it's kind of basing underneath, just above the 50, and actually it looks pretty good. But I like this mining position, and I really like the one. What was it we just saw? WPM. Yeah, that's very good. WPM, GFI, similar kind of setup, and AEM. All three of those I can recommend. WPM looks to be the best out of those. CRM, yeah. So everybody in my pro trading group was very interested in CRM because they were seeing this pattern right here. Similar pattern. You're going to see this on a lot of software names. You're going to see it in small caps. You're going to see it in some of the semiconductors. And it really looked, it was heading into earnings last night. Earnings were good. It was a beat. Um, I guess a little light on forward guidance. I'm not exactly sure what the issue was, but it got knocked back pretty far. And I was watching it for about an hour this morning to see if it would start to recover, and it never did. I moved on. I actually took it off my trading platform so I wouldn't look at it every hour. And now it looks like it's recovered back up. Um, so CRM and now is in the same space. Hasn't reported earnings not too bad, not too long ago, and it was a big up, and it hasn't come anywhere near. This is a revaluation power gap, right? A power gap is a big up on some sort of event that never fills in, and the stock usually just starts trending higher from there, especially at the end of a pretty sizable downtrend. On a percentage basis, that's a big downtrend. So now looks good and got a bunch of upgrades this morning. CRM, correct me if I'm wrong, but I know somebody downgraded it off the earnings, but I think there was a long string of analysts coming out and just reiterating a buy. So we're good with CRM. We might have to lower our target price a little bit, but we're good with CRM. So lots of good sentiment out there for the stock, and I'm not ruling it off yet as a buy and an add to our wealth building portfolio. But I just looking at it this morning, it did not look very good. Right now, it's forming a bullish hammer candle, tons of volume, of course, which always happens. But I tell you what, I wouldn't be interested yet until we get back above the 50, we get back into this right shoulder, we get closer into that gap, the earnings gap. Here's another tip. So earnings gap up, you don't want to see that gap fill in. But when you get an earnings gap down, sometimes the market overshoots that. It misinterprets maybe what was good news, or maybe the CEO just isn't very good at massaging the press, which you have to do. Jensen's very good at that. The Apple guy is pretty good at that. Elon Musk is not very good at that. Elon Musk is just too honest, right? He lays out all the bad news. So CRM, maybe that's a problem. And in fact, it actually is still good in terms of valuation. It just has to move back up. So an earnings gap down isn't necessarily a no-go zone, but you want to see it move back into that gap. It looks like it's starting to do that. All right, guys, I'm going to let you go. I want to produce this and then get you the link, and then I will trade the last hour with you all. God bless. See you soon. Back in the room in just a little bit. Bye for now.